is Tuesday, 14th of April, 2026. So this is a market review. I'm looking at price action retrospectively. Welcome to the channel, and if you find this insightful, if the information is useful, like, subscribe for more content like this. So I'll be heading over to a study where I'll show you the 70% mid open range gap model. I still taught this in 2024. He taught in the 2024 mentorship. It delivered today was high probability, and at the end I also show you the macro and close macro runs to regular trading hours by liquidity, the target I was looking for. So I'll do this progressively, showing you from higher time frame to lower time frame. So let's get started. Now on this daily chart, you can see the daily suspension block. So from this to this, that's the daily suspension block. Price opens right here and trades just below this low. So from this range from low to high is actually a buy side imbalances and efficiency, including the volume imbalance at the bottom. So price basically performed an institutional order flow entry right here. I'm saying the bias is bullish, and because of this and a rejection of this level is really bullish. We rejected this level in Asia. Asia formed the low of the day. So price also gapped down. So the close was here on Friday last week. Price opened this week right here. So that's a gap down. We're looking for full gap closure from low, new week opening gap low. When we see price trade to new week opening gap high, and then maybe the buy side targets which we saw get hit. So the narrative was looking for higher prices with very strong bullish order flow signatures like this institutional order flow entry. The bodies are staying in the upper half of the daily suspension block. So moving over to the 4-hour time frame. So this is the 4-hour chart. I'm bringing attention to this buy side imbalances and efficiency. We invert it here, use it for resistance, and then we reinvert it here, then reclaim it, reinvert it again, then reclaim it. So this pass up trades above this 4-hour buy side imbalances and efficiency. It reclaims it, but we do not see any candle coming down to retest for a bullish expansion. So I'm saying I'm going to look at the corresponding 4-hour time frame. So we have a 4-hour array. Once we're looking at a 15-minute time frame to see how the array is used. The same way if we have a daily array, we want to look at the 1-hour time frame. That's for the first instance. So I'm going to look at this on a 15-minute chart to see how this array is used as it trades higher. Also, I'm bringing attention to the higher time frame on liquidity, which is regular trading hour buy side liquidity. It's my fifth bullish target. There's also the fourth bullish target. There's the 4-hour buy side liquidity. So 1, 2, 3 at the liquidity pools. But we have the expectation to see new week opening gap high traded to on a gap closure. Hop over to a 1-hour chart. I cannot really find an array here, but I'm also taking attention to the fact that this low right here, this candle trades down, it does not hit the low of this 1-hour buy side imbalances and efficiency. That's a bullish signature in itself. So being unable to hit the low, trading so close to it and leaving a tiny portion open is a bullish signature. On this chart, I zoom in and you can really see it. It does not hit that low. So I'm moving on to the 15-minute time frame. On the 15-minute chart, you can see I have the narrative to the right. This is regular trading hours. So you have been seeing this chart to the left is regular trading hours. It's a 15-minute time frame regular trading hours chart. This is a 15-minute time frame electronic trading hours chart. So on the 15-minute regular trading hours chart, you can see the sell side right here, regular trading hours sell side being the New York PM low, and there's regular trading hour buy side being New York PM high. So back to electronic trading hours, we saw a gap down moving from last week to this week. So the week opens here. We have this new week opening gap. So we're seeing price trade up to it in Asia. Asia trades up and finds some resistance at the lower quadrant. London trades higher, and we finally find ourselves at the pre-market session trading at constant encroachment, rejecting it. Even the bodies of the candles are rejecting it, and we're running down to take London lows. Order pairing takes place here, and price rallies off London lows. After its order pairing and London lows, it rallies off, reclaims the 4-hour BC. So on the 15-minute time frame, we can really see here that when price closes above this 4-hour BC, it retests it. This retest does not even touch the constant encroachment of this 4-hour BC, and then we'll see a rally to complete full gap closure, and then we'll see another rally aiming for the targets, buy side liquidity, target 4 and target 5 being regular trading hours buy side liquidity, which aligns with this level. So I'm bringing attention to the fact that when price was trading low or retracing into the sweep of London lows, we did not hit mean opening price. So being unable to hit that price is bullish, and it's a bullish signature. At the same time, the open is a massive gap low. We're seeing sentiment saying the ceasefire is not this and that, so price is supposed to go more bearish, given that we open lower and there's bearish sentiment. I saw Trump talking just ahead of the New York Open, and was very bearish for stocks based on what he said concerning the ceasefire. But still, we saw all of this resisting that sentiment and moving higher. So this is clearly a Jura swing right here for the session. This is for order pairing, and price is moving against the sentiment. Moving over to 1 minute time frame, I'm showing the pre-market session. So this is a pre-market session right here. In pre-market, just disregard this for the moment. We'll come to this when we're looking at the New York AM session, 9:30 opening bell, or look at this regular trading hour chart. But for now, keep your attention here. This is the IC 2026 bread and butter model. You also have to disregard this red shaded array. We have not yet reclaimed it at this point in time. The price trades up. If you look at the liquidity from 7 p.m. to 5 a.m., you find that we have been trading up since Asia at the open. So there's sell side liquidity, and there's this London regular trading hour low. I showed you on the 15-minute time frame. I could just go back to it so you see. So this 15-minute time frame, you see London has very clean lows. So this move down is what I'm showing you as the ICT 2026 bread and butter model. So price actually posts this high with this week at 7 a.m. So at 7 a.m. we'll find a premium wick. We're able to trade to midpoint of that wick. From there, find this buy side imbalance, sales and efficiency. It is inverted. When price hits it, it's unable to stay in the upper half. So the wicks go there, this body opens there, but it quickly rejects. What do we have here? We have an order block. I see just dropped this nugget some time ago, saying an order block at the low of a bearish inversion fair value gap is like a brick wall. Price comes in, it cannot even close anywhere beside it. It just bumps in, rejects, and we see this run lower. So that would be a very good entry. It moves lower, retraces back into this, dumps, and finally hits the London regular trading hour lows. And that's my major source of liquidity for this model. So all this model is saying is identify the profitable stops between the periods of 7 p.m. and 5 a.m. New York time. And that's what you have. You have sell side is attacked. From there, we see it's changing the state of delivery bullish, winning to the open. So I'm bringing attention now to regular trading hours. We're looking at the New York AM session from 9:30 a.m. to 11:30 a.m. Bringing attention to this part of the price action. So this is regular trading hours, 15-minute time frame. The narrative is a higher time frame order flow is bullish. We saw that on the higher time frame. 15-minute time frame is rejecting, as it trades down, it's rejecting this 4-hour buy side imbalances and efficiency. It's not even trading up to the lower half. The mid gap of open range gap, the mid open range gap model. So mid gap of the open range gap. Open range gap is this. The close is here, open is here. So the mid gap is right here. So we're looking to see price trade up into the mid gap. Initially trades lower in the first 15 minutes, and the second 15 minutes it trades to both the mid gap, the full gap closure as well, and also hits the New York PM high, regular trading hours liquidity. So ICT actually mentioned this real time, this inversion fair value gap. In my point of view, it will be difficult to take this entry without a lot of experience. But after this Judas swing, it fails to take this low, but then it rallies massively, inverts this, and on the next candle hits it and rallies off. However, I do not think this is a possible entry for any level of skill set that's not as advanced as it gets. But with a more advanced skill set, I think this could be an entry. It rallies up to the high of open range gap, which is this level. So this candle hits it, and then we see a retracement. Now, I see this retracement as fully tradable. It actually retraces to equilibrium. So from this low to this high, equilibrium of this new daily range is right here. What arrays overlap at equilibrium? We have this wick. So it's a premium wick actually on this candle, but it finds itself in the discount section of this daily range. Hence I call it a discount wick, but actually it's a premium wick. So using this premium wick as an entry, you have this run up. Price is trading to 50%. A good stop loss will be at the bottom of this projection. So this is the OTE sweet spot 0.79%, the classic pattern. So putting the stop loss here will be safe, but for me, putting the stop loss under this inverted fair value gap is very safe, because this sharing the same range as this other block is not to be traded to. So I see this as a breakaway gap. At least the midpoint of this should not be traded to. So I think a stop loss below this inversion fair value gap is safe. That was the case. Price rallies off, attacks open range gap high very smoothly, forms this fair value gap, uses it to hit new week opening gap high, it stops at a dime and then retraces. So it's retracing into the open range gap midpoint again. ICT mentions this liquidity sweep real time. So it's a liquidity rate. Quickly, you can see more insights on the 15-second chart. He actually showed that during his live stream. Then we saw a massive rally up to sweep this buy side liquidity pool, and that's basically all for the New York AM session. Market on close macro does not do much. It just ensures that price closes above, and that's very insightful because we saw Asia trade higher, we saw London session consolidate but also trade higher in sort of way, and we see pre-market session after sweeping a London low, it also traded higher. So we're looking at a trendy scenario. When price closes above this high is 10:30 a.m. like it's before 10:30 a.m. From 10:30 a.m. to 9:30 a.m. that's the first hour dealing range. So the first hour dealing range high is here, first hour dealing range low is right here. So we have this dealing range closing above the high of that dealing range is signifying that the launch session will likely form a continuation move to the upside. So the launch session will likely continue this trend higher. So looking at the launch session, launch actually after posting this high, price retraces to sweep relatively equal lows here. So these are relatively equal lows formed just before market on close macro. Here and here, they are swept. I see gives the entry as when you see price break out of the high. So this high actually here, when price breaks out of the high of the first dealing range, the first value gap there is the long. So you see this high aligns with new opening gap high. So on the long session, I'm looking to see when price breaks out of this new week opening gap high, does it show a fair value gap for entry? So we see this long wick, drawing that out, we'll find this here as well. Price uses a fair value gap here, it's a BC, and we see it rallying, finding support, sweeping 4-hour buy side liquidity, retraces deeply back into this wick, finds support, rallies to the target 4, and that's how launch ends at target 4. So it's attacking buy side liquidity. Now in the PM session, we consolidate at the beginning of the PM session from 1:30 PM. We consolidate up till we begin to rally a bit at the midpoint, that's 2:30 PM. The midpoint of the silver bullet will begin to rally, and then we see market on close macro starting at 3:15 to 3:45. So market on close macro has two functions. It either runs against profitable stops on the day. So for instance, we've been bullish. To run profitable stops, we to run sell stops. That means running the sell side liquidity pools. Anybody who has a true stop loss there will be taken out, and the market will close. But then it also has a second function which is to run to a target that has not yet been met. So in this case, we understand that regular trading hours has the best liquidity. Regular trading hours has the ultimate liquidity for the day. It's always the ultimate draw. That's where you find the market topping most of the time. So regular trading hours buy side liquidity is my target 5. That price comes in at 25,558 even. That's right here on regular trading hours. Market on close macro is rallying for that level. We'll find this inefficiency here in this other block. It is used, and the key time 3:50, backtest this time 3:50 PM, forms some massive displacement, and that puts up the last leg up, hitting target 5, and we'll move into the close. So all that happens before target 5 is hit before 4:15 PM or 4:14 actually, when the regular trading hours stop. That's been it for this review. If you found all that insightful, if it was useful, subscribe to the channel for more like this, and I'll see you in the next video.